Historically, we've been accepting mostly crypto native assets.
Where's Euler headed to from here?
I think RWA really provides a critical layer of diversification in the lending borrowing space so that not all the collateral values move in the same direction.
You think some of these institutions are looking at that?
Working with partners that can provide that liquidity and smooth transition, onboarding, offboarding these assets, and taking a leverage position is going to be very key.
What's coming down the pipeline specifically?
The partnership with Centrifuge has been a month of work, and it's a very popular product, right? S&P 500, and a lot of people outside of the US are very excited about the launch of tokenized US stock indices and using them.
Hi everyone. Today we're here at the DeFi Drip, hosted by Centrifuge. Lovely day in Cannes, in South France. We are at the RWA Summit today, and we are joined by Jonathan from Euler. Jonathan, would you like to give a quick intro?
Yeah, thanks for having me. Jonathan, I'm CEO at Euler Labs. Super happy to be joining and speaking at the RWA Summit today, and thanks for having me. And yeah, Euler Labs, we're building the DeFi borrower lending primitives and vault infrastructure in the space since 2021, and it's been quite a journey and working in crypto, and it's super exciting to see what's happening in the space, the convergence of TradFi and DeFi and innovation RWA, and how we can be part of the piece to really unleash the potential. It's super exciting. Yeah.
Nice. I mean, speaking of journeys as well, Euler had one of the loudest comebacks in DeFi, a $200 million hack, $4 billion in deposits. You've just taken the reins as CEO.
Yeah.
Where's Euler headed to from here?
Yeah, I think it's really unleashed the infrastructure that we've been building. And the comeback story has been, we've been getting so many encouraging, positive feedback from the community that trusted the tools and protocol that we've been building. And I think the tool is really ready to work on the much larger scale, right? So that includes institutional adoption, that includes fintech integrations, really bring the tools beyond the crypto native communities to large institutions and retails through fintech, and to really unlock a lot of the capital efficiency, yield opportunities, and also allowing multi-asset class onchain as collateral through our lending vaults infrastructure. I think that's what we're focusing on right now, building different toolkits to allow people to trade, people to generate yields in a more secure and compliant way. That's intuitive, easy to understand, easy to use. So I think that's definitely the focus for this year.
Yeah, nice.
Yeah.
You've got the modular vault architecture there at Euler as well. For those that I guess aren't as accustomed to the space, what does that actually mean? And I guess how is it different from the rest of the industry of for what Euler is providing?
Yeah, so I would say in the borrower lending landscape, there are two popular architecture. One is modular, one is monolithic. They have their own pros and cons. But Euler is building the modular for years, and I'm personally biased towards modular infrastructure. I really believe the risk isolation that modular infrastructure provide is a key unlock to onboard institutions, because their top concern is security. And especially for RWA, a lot of these assets behave in their own ways, right? So you're talking about private credits, you're talking about gold, commodities, you're talking about tokenized equity, indexes. You have to kind of use modular infrastructure to unlock, to build different markets with different risk parameters. So that's what we're seeing in the space. And the good thing about Euler's architecture is we are taking some of the benefits from the monolithic architecture, which is capital efficiency, through our Ethereum Vault Connector technology. So we can chain a few modular vaults together to make it highly capital efficient, while keeping the cluster separated from the rest of the stack. So I think that's going to be very popular and wide adopted by institutions who are looking for secure environments, but also select capital efficient markets within their own scope. So I think that's something that's going to be really allowing the next wave adoptions in this space.
That's nice. I mean, you mentioned these fintechs, institutions, the adoption. for Euler. Like, what does that actually look like on Euler? And I guess what's coming down the pipeline specifically?
Yeah, so we had a few like exciting announcements in the first 3 months of this year, including the integration with Kraken Earn, which has already, I think, secured more than 100 mil deposits in just like a few months, which is super exciting. You see how popular this product is for investors coming from the Kraken platform, right? And we're working with more centralized exchanges and fintech partners like that. So stay tuned for more announcements coming down the pipeline in the next couple months. We're talking to a lot of major partners in the space. Yield opportunity and earn programs is definitely a huge priority for all the stakeholders that we talk to. And lending infrastructure is a big piece in that broader landscape. So we're super excited to kind of move the needle along with those folks. And also, like integrations with partners like Ondo, XStocks, and also Centrifuge, right? So tokenized equities is going to be huge for unlocking retail utilities that get exposure to stocks from different markets and utilizing them as collaterals to express their views on the assets that they hold through our technology, right? So I think those are some of the amazing announcements that we made this year. I think there's more to come later this year.
Yeah, I mean, touching on the real assets section, like
Yeah.
we recently did a partnership with you guys. We launched the first tokenized, licensed, and now decentralized version of the S&P 500 on-chain,
Yeah.
DeSPXA. That's now live on Euler. We have these types of integrations coming, real assets being used as collateral, unlocking, liquidity against those assets, etc. How else are you thinking about the real asset space? Yeah, you guys are making that play down that line. Like, how else are you guys thinking about it? What does that mean for Euler in terms of getting real asset adoption on Euler's platform?
Yeah, I'm super excited. I mean, the partnership with Centrifuge has been a month of work, and it's it's a very popular product, right? S&P 500, and a lot of people outside of the U.S. are very excited about the launch of tokenized U.S. stock indices and using them as collaterals, right, to borrow against it. So in TradFi or fintech right now, having U.S. stocks exposure is already a huge unlock. But on top of using lending infrastructure on top is something that crypto and RWA is really unlocking for people who traditionally don't have these toolkits readily accessible to them. So we're already seeing huge innovations, but I think there's more to come, right? So I think what's exciting is to see these high quality collaterals coming on chain, because historically we been accepting mostly crypto native assets like Bitcoin, Ethereum, Solana as collateral, and these assets can be highly correlated at the times, right? So when macroeconomic environments start to shift, you can see the value of these collaterals can move in the same direction. I think RWA really provides a critical layer of diversification in the lending borrowing space so that not all the collateral values move in the same direction. I think that diversification point is huge because we sometimes often see huge stress in terms of utilization or vaults when the market starts to turn in the reds, right? So I think RWA is going to provide that diversification that's much needed to provide more stability to the whole lending and borrowing space on chain. Yeah.
Yeah, nice. I mean, yeah, you touched on the reflexive nature of using ETH and Bitcoin as collateral. These assets, when they are used as collateral, when the market hits a downward spiral, cascading liquidations, et cetera, et cetera. I think also like one of the things that real world assets are also providing there is the ability to have these, I guess, programmable collateral pieces to unlock further capital efficiency as well, whether that being looping strategies or using real world assets as collateral to borrow against and deploy into further DeFi strategies. Are you seeing a lot of demand in that looping space? Do you think some of these institutions are looking at that? Is that what they're wanting?
Yeah,
Curious.
definitely. So I think there are, so when we're looking at looping, it's mostly applied to private credits and treasury bond yield, right? So institutions are definitely doing research and asking about like infrastructure provider like us, like how do we unlock looping strategies for these RWA assets on chain? There are some there are some like bottlenecks to needs to be solved with longer, especially longer duration assets. But I think looping can be unlocked for shorter duration assets in the very near term. I think we have something that's available to launch pretty soon. So stay tuned. I think looping allows institutions to really boost up the treasury yields in shorter duration bond structure and fixed incomes. It's definitely going to be a very popular strategies. We're working very diligently with risk creators and also a few infrastructure that provide more liquidities and onboarding, offboarding process with these bond structure, because some of them don't settle instantly. There are some delays with RWA assets. That's a little bit different from crypto native assets that settles in seconds on DeFi, right? So with RWA, sometimes they move at their own speed, and it's different from each fixed income to another. So I think really understanding the characteristics and the speed that we're dealing with looping strategy, and working with partners that can provide that liquidity and smooth transition, onboarding, offboarding these assets, and taking a leverage position is going to be very key. So that's something that we're definitely focusing on for the next couple of months to solve.
Yeah, definitely, definitely. I mean, yeah, the plumbing is definitely getting put in place right now. Like we're working on it, you guys are working on it.
Yeah.
In terms of getting these assets DeFi composable to actually use in these strategies, whether it's the liquidity, whether it's the actual assets themselves. You mentioned like treasury bills and private credit. Is there any other assets out there that you think would be fitting the bill for, having a real world asset down the pipeline to put on chain? Or is there anything that I guess Euler is looking for in terms of like asset quality or collateral that you think might be a nicer thing to have in
Yeah,
this
I think
space?
you covered the fixed income brackets. And also we launched the tokenized equities with you guys, Ondo, XStocks. I think those are the two major buckets. Another buckets that we see a lot of market demand is tokenized commodities, starting with like precious metals and gold, right? So that's something that people are really looking forward to start leveraging lending borrowing infrastructure. You see a lot of the options on tokenized gold, and gold as an asset class has been super popular, that offers diversification to a traditional portfolio, right? And the same applies to on-chain portfolios as well. So we're seeing a lot of people being asking and demanding markets and vaults built around tokenized gold and other commodities coming in the pipeline. So that's another huge unlock. And I would say the last remaining piece is the yield generating, yield bearing stablecoins. That has been super popular in the crypto space in the last 1 or 2 years. And on DeFi, we are definitely working very diligently with a couple of major yield bearing stablecoin issuers, and continue to provide infrastructure on simple looping and also interoperability solutions to make sure these stablecoins has real utilities across the entire DeFi ecosystem. So Euler is definitely like a key infrastructure that unlocks all of that. So I would say, yeah, those are the key major categories.
Yeah, nice, nice.
Yeah.
Cool. We've had a great day today. But to wrap it off,
Yeah.
would love to ask you a nice ending piece of like, I guess right now in the space, what is a spicy take that you have that may be a bit contrarian to the norm right now?
Yeah, I think everyone is very excited about RWA and what it can do on crypto, which I totally agree. I think we already covered a lot of those pieces. I think one thing we have to do better as a space, and we're working with a lot of risk curators on our network, is creating a very robust risk framework on all different categories of RWA, especially within the fixed income buckets. There are so many different tranches and different types of bonds and yield product that people are tend to be less familiar with, especially someone that's outside of the traditional finance space, right? So I think having a very transparent and robust risk framework on the 24/7 market, covering all different asset classes, is going to be an ongoing effort for us and also the risk creators and managers to work towards. I think it's a lot of work to be done, but I think we can do it. But it has to be the focus for us for the next couple of quarters. And a positive sign is you see a lot of institutional grade risk managers come on chain to manage assets as creators. lending protocols like us. For example, Centura, for example, you see announcements with Bitwise, Apollo. I think there's a lot that we're talking to in that same buckets coming online. That's super exciting. I think there's a lot of good announcements that to be made this year. Yeah.
Yeah,
So,
awesome.
yeah.
I think that's a great wrap to the conversation here. Thanks so much for coming on.
Yeah. Thank you, Adam,
And,
for having me today. Yeah. Nice
awesome.
chatting with you. Yeah.
Likewise.
Yeah.
Cheers.
So.